Hello, this is Rob Carrig from Carrig Wealth Advisors. Today is February 1st, 2022, and welcome to our video update. Greetings to all our clients. Special greeting to all the clients of Faith Harrington, many of which I've met over the last year or so, almost all virtually. I hope to look forward to meeting everybody in person sometime soon. What I thought I would do is a quick update given the volatility we've seen in the market recently. I may try to do these on a regular basis as well on other topics, so feel free to provide any feedback. As many of you know, in January, the market showed a big burst of volatility. From January 3rd to January 27th, the S&P 500 was down about 10%, which is normally what we call a correction. That was after last year being up about 28%, and the year before that being up 16%. But nevertheless, volatility is always a little bit scary or disconcerting. All right, I'm gonna share my screen in real time. Let's see if I can do this. Okay, what I'm gonna do here is just go through one chart. This should be a total of 3 or 4 minutes or so. So this chart, courtesy of JP Morgan, shows market volatility over time. So I started my career in 95. A couple points I want to make here is the S&P 500, which is an index of 500 different US-based companies, some of the largest, if not the largest companies based in the US. That index was around 400 or 500 was the index level. That, as of January, was about 4,800. So you can see, first point is people that just rode things out over the last 25 years made many multiple times their money that they had invested. Second point is, along the way, there have been big bursts of volatility. I mean, some of these as high as the financial crisis. The S&P 500 went down 57% at one point. The dot-com bust, things went down almost 50%. This chart needs a little updating because it will soon have a circle here with what we just experienced down 10. The early days of COVID, the S&P went down almost 34%. That was in the span of 5 weeks that happened. Fastest drawdown in history by a huge margin. So a couple points I want to make. First of all, long-term investors have been very well rewarded. Secondly, the S&P 500 as an index has recovered and gone on to higher highs 100% of the time historically. I can't guarantee that's going to happen again, but historically that has happened every single time. But the main point here is just that volatility is nothing new. It's normal. It's healthy. These corrections happen from time to time. Will this be a major correction vis-a-vis sort of a bear market? I don't think so. The signs do not point to that. Are we done with this? Probably not. It's always hard to tell. But my point in all of this is that if we're going to invest in stocks, we have to be accepting of the inevitable drawdowns that happen from time to time. And the key is don't take more risk than you can handle. So if you feel like your risk tolerance has changed or your liquidity needs or your needs for income has changed, please get in touch. And I look forward to meeting all of you some point soon, face-to-face, hopefully. If there's anything we can help with, please don't hesitate to reach out. Thank you.